Artificial intelligence has become all the rage among investors. A top priority of many investors has become finding the companies that will most benefit from AI. One of the most obvious examples is a software company called C3AI. AI is in the name, and its stock ticker symbol is AI. The company IPO'd in late 2020 at a $4 billion valuation. On the first day of trading, the share price more than doubled, bringing the valuation to almost $10 billion. This valued the company at roughly 60 times its trailing revenue, despite the fact that it was burning cash. Unsurprisingly, the stock price collapsed in 2022, along with the broader tech bubble. Yet following the release of ChatGPT, its share price has increased by 140%. So what's going on? Does C3AI have anything to do with ChatGPT? Will it somehow benefit from ChatGPT? C3AI was founded by a software entrepreneur, Tom Seibel, in 2009, but it wasn't always called C3AI. Up until 2019, just 1 year before its IPO, it was called C3IoT. In fact, that wasn't even its first name change. Prior to 2016, it was called C3 Energy, and initially focused on making software for so-called smart grids. So what does C3 do? Do they make software for electric utilities? Do they do something with the Internet of Things? Or do they do artificial intelligence? It's hard to keep track of all their name changes. In this video, we'll take a deep dive into C3AI and see whether or not it can live up to the hype. Keep in mind that this video is not investing advice. Please do your own work and consult with a professional before making any investment decision. Tom Seibel founded Seibel Systems in the 1990s. Seibel Systems made customer relationship management, or CRM, software. This was a computer program that allows salespeople to keep track of and store information about their customers, among other things. It was a huge success in the late 90s and early 2000s. In 2005, it was acquired by the enterprise software giant Oracle for $6 billion. This sale made Tom Seibel a billionaire. Around 2008, he thought of a new idea for a new software company. The idea was to create a software for industrial and utility companies to track their carbon emissions. He named the company C3. At the time, he expected both the US and Europe to implement carbon taxes or cap-and-trade systems for carbon emissions. This would force companies to record their carbon emissions. Thus, there would be a huge demand for software solutions to help companies do this. They created the software and tried selling it in Europe, but it ended up being a big flop with underwhelming customer demand. So in the early 2010s, they expanded their offering by making a smart grid software platform. Utility companies can connect their various databases to the C3 Energy platform to keep track of how much electricity was being consumed by each customer, etc. This allows them to better optimize their electricity generation and efficiently meet demand. While Seibel played this up as a massive opportunity at the time, it turned out to be a relatively niche market. So in 2016, they rebranded to C3IoT, which stands for Internet of Things. The idea was that factories and other industrial facilities were adding more and more internet-connected sensors onto their equipment. C3 made a software platform that can aggregate this data and do predictive analytics. For example, they can look at the data from various internet-connected sensors and predict when a piece of equipment is likely to break down or need maintenance. They created machine learning models to make these predictions. In 2019, about a year before their IPO, they changed their name yet again to C3AI. It appears to have been mostly a branding exercise, as their core product offering didn't change much. It appears the main use case of their software remains aggregating various databases to do predictive analytics and similar things. They chose the ticker symbol AI, and they market themselves as being primarily an AI company. Indeed, they use artificial intelligence to help their customers do predictive maintenance and have been doing this for years. AI became a huge buzzword after the release of ChatGPT, which can create human-like responses to natural language prompts. When ChatGPT was released, investors could immediately see that generative AI is the future, and wanted to find publicly traded companies that would be leaders in this space. Given that C3AI had already positioned itself as an AI company, it was in a prime position to benefit from this hype, from both a marketing and investor sentiment perspective. There are many different types of artificial intelligence. Many companies that you wouldn't even think of have been using AI for years. For example, Netflix uses artificial intelligence to predict what movies and shows you're most likely to enjoy, based on your previous watch history. This is AI, but it has nothing to do with the type of AI that powers ChatGPT. The widespread adoption of ChatGPT has no impact on Netflix's business. Similarly, C3AI uses machine learning to crunch large amounts of customer data to predict when industrial equipment needs to be replaced. While this is technically AI, it has absolutely nothing to do with the type of generative AI that powers ChatGPT. Yet when Tom Seibel saw the hype around ChatGPT, he wasted little time to jump on the bandwagon. On January 31st, 2023, just 2 months after the launch of ChatGPT, they put out a press release announcing a new generative AI product suite. They licensed ChatGPT from OpenAI and plugged it into their existing software. According to Tom Seibel, this fundamentally changes the human-computer interaction model and will change everything about enterprise computing. But it's not just Tom Seibel who's excited about this. According to retired Lieutenant General Ed Cardin, C3's new generative AI product is a game changer for the US Department of Defense, representing a technological breakthrough. So who is this General Ed Cardin? It turns out he's a paid employee of C3 AI. This was not disclosed in the press release. So why did they get one of their own employees to give a testimonial? Why not get one of their customers? Because the product hadn't even been launched yet. Nevertheless, the company's stock price started to surge as retail investors piled into the stock. In May of 2023, Tom Seibel gave a presentation where he unveiled the new generative AI product that had been hyped up so much. It appears to be a search engine powered by ChatGPT, licensed from OpenAI. It allows the user to search for data that they have already integrated into their C3 AI dashboard. It could potentially save you a little bit of time compared to searching for the information manually, but it hardly seems like a great game changer. And if it really was a game changer, you would expect to see it show up on their financial performance. In the quarter ended July 31st, 2023, which was their first quarter after releasing their generative AI solution, their revenue actually declined slightly compared to the prior quarter. Their operating loss expanded to a record $74 million. Far from being a game changer, the new generative AI product seems to have had negligible, if any, impact on their revenue. Another point of concern is that even as their revenue has increased in the 2 years after they went public, their operating losses have also exploded. In the past, Seibel would tout the company's high gross margins as evidence that the business would eventually become profitable. Here's him telling Mad Money's Jim Cramer about the company's path to profitability in July of last year.
To people who have never done what you've accomplished. But we have investors who are saying, look, I'm in this thing, I know Seibel is bankable, I want to see right now, this year, that he can't make a lot of money from it.
Well, I think what we need to look at is the addressable market opportunity.
Okay.
And for me to throw this into a cash positive business in 90 days, which I could do,
Right.
would be not in the best interest of the shareholders and not in the best interest of our customers. We have a clear path to profitability, in the next, let's say, 6 quarters, where we'll basically reduce our marketing expenses from 29% of revenue to 11%. Nobody spends 29% of revenue on marketing. Our R&D expenses to establish technology leadership have been 44% of revenue. Goodness, Jim, nobody spends 44%.
No, I agree.
Trade futures on the go with Ninja Trader Mobile. Place trades with simple,